A group of interested investors and traders assembled around a table for discussion during the busy financial sector. They were all wondering the same thing: can a mere $100 turn into a sizable $10,000 in the volatile world of trading, and can it be done quickly? It was an exciting and engaging project that had piqued their collective interest. How did they overcome this obstacle? Hello and welcome to Trend Visionary. Today, we'll look at the incredible success story of ChatGPT's trading method, a unique trip that resulted in a whopping 19,527% profit. Join us as we unearth the secrets behind this incredible accomplishment and investigate the possibilities that exist in the world of trade. Warning disclaimer: we are visionaries and technology evolution enthusiasts, not financial consultants. This is not in any manner financial advice nor an investment suggestion, just a story of success. Remember that all investments can be more or less risky and you can lose all your funds, so be careful and always do your research. A group of traders approached ChatGPT for help in developing a trading system that would swiftly make $100 into $10,000. They first concentrated on volatile assets and technical analysis, but eventually applied AI technology to develop a trading view indicator code. They modified the plan as they investigated the possibilities of the indicator, resulting in an effective masterpiece. But how would they put this newfound approach to the test? The solution was to run a series of trials, 100 in all, with the price of Ethereum as the guinea pig. These tests would be carried out with a diligent eye on a 3-minute timescale when the pulse of the market could be sensed in every tick. They chose to create a solid foundation before getting into the nitty-gritty of executing the strategy. Their first move was to examine the trade charts, which revealed a treasure trove of possibilities. To properly implement their approach, they would require 3 crucial tools, all of which had been suggested by their AI mentor. Capissimo, a KN-based machine learning method, was the first to examine previous market data and forecast future price fluctuations. Based on past data, its KN classification system effectively forecasted stock price rises and falls. Despite its use, traders quickly discovered that the tool was not without flaws and that they needed to be more cautious while utilizing it. They added another weapon, the EMA ribbon, courtesy of visionary Dominic Ascliti, to support their plan. This indication was a stack of exponential averages that had been elegantly weaved into a ribbon on the price chart. It was created to determine the intensity and direction of market trends. A ribbon with an upward slope signified an upswing, whereas a ribbon with a downward slope suggested a downturn. It was a handy tool for traders looking to capitalize on market momentum. As the traders dug further into the EMA ribbon's complexities, they were forced to recognize that it also sent out buy and sell signals. This raised the question of whether they should rely on the EMA ribbon signals in addition to the machine learning technology. To discover a solution, they chose to temporarily deactivate the EMA ribbon signals, aware that a single source of signals may result in a slew of false alarms. Nonetheless, they want more from the strategy's current form. They were looking for more confirmation, a means to substantiate their trade selections. Their answer was the Relative Strength Index, RSI, a popular trading tool. The RSI measured the strength of a security's price movement and ranged from 0 to 100 on a chart. When the RSI exceeded 70, it was considered overvalued, and when it fell below 30, it was considered oversold. However, the traders were not satisfied with a normal RSI. They desired it to be more sensitive to supply them with more genuine trade entries. They did this by adjusting the upper and lower bands of the RSI, placing the top band at 60 and the lower band at 40. With their tools in hand, the traders set about assembling the entry circumstances for their long and short positions. Several requirements have to be satisfied for a lengthy trade to take place. First, the price has to stay above the 200-day moving average. The EMA ribbon must then be placed over the 200 EMA and colored green. In addition, the price should return to the EMA ribbon without falling below the long-term EMA. A blue label must be printed by the machine learning tool. Finally, the RSI must be either oversold or overbought before the purchase indication. When all requirements were met, the traders executed long transactions and methodically managed them. They placed orders to stop losses below the swing low, doubled the profit objective, and then increased the stop loss to break even after a quarter of the profit was reached. Short transactions, on the other hand, were controlled by a distinct set of rules. The price must close below the 200-day moving average. the EMA ribbon should be red and slope downward. The price should return to the EMA ribbon without exceeding the long-term EMA. During the decline, the RSI must become overbought. Wait for a final confirmation from the machine learning tool. The traders stressed an important aspect here: avoid making a short trade if the RSI goes oversold at the same time as the sell signal. They clarified that the short trade should be entered only if all requirements were satisfied. Stop-loss orders were designed to be placed above the most recent swing high, and profit objectives were set to double the risk. As with long trades, the stop-loss was moved to the break-even point after a quarter of the profit was realized. The traders were confident in their plan with these precisely adjusted parameters in place. They were now ready to put their plan to the test, to enter the market and personally experience the highs and lows of trading. The findings of the backtesting formed a persuasive picture. After a series of perfectly performed deals, the approach had transformed an initial $100 into an astounding $19,527. The traders were astounded by their success, but they couldn't help but worry if this technique was just a fad, or if it could withstand the test of time and the volatile nature of the market. It was a question that remained in the air, like a doubtful whisper. The fact was that their technique, with its larger risk per transaction, had the possibility of both amazing gains and significant drawdowns. It was a dangerous route, and they knew they had to walk cautiously. Traders began on an exciting quest to turn modest money into a large fortune while balancing risk and profit. Despite the uncertainty, they were prepared to face the volatile world of trading, equipped with new insights and a battle-tested method. Thank you for joining us on this fantastic adventure with ChatGPT's great trading approach. We hope our investigation of the 19,527% profit accomplishment provided you with inspiration and insights. Don't forget to like, comment, share, and subscribe to Trend Visionary to keep uncovering the unlimited chances in the world of trading. Stay tuned for more enthralling videos that will have you wanting more.